Good morning, traders. Welcome to this video that I'm doing here on wave analysis. The topic of this video today is the concept of wave analysis. Now, if you know me, you know I use wave analysis as a method to trade, and it gives me an edge in the market. Now, there are many methods of trading out there. You will know that technical analysis and the different types of technical analysis. Today, I'm going to be talking specifically about wave analysis. So what I've seen is that there's a lot of wave analysis gurus out there, and the concept they're using might be a little incorrect. So I'm going to tell you today what the concept is, what really is wave analysis, and why it will work, or whether you can use it to take advantage of the market. Can you use it to make money? So first, you need to understand what the concept is based on. So I'm going to surprise you here, because I think you would be surprised when I tell you what the concept is based on. It's based on a simple fact: to make profit. So you want to know, well, how the hell can you make profit by using wave analysis, right? Well, it's very simple. It is as simple as something you've heard many times: buy cheap, sell expensive. Buy low, sell high. If you're a trader, you've heard this at least once or maybe a million times in your life. And you may want to know, well, what does it really mean to buy low and sell high? Because the question of where the low is and where the high is always a big issue. Is this price of Bitcoin the high, or can it go higher? Was 5,000 the low, or could it have gone lower? So that is the problem. So what I'm going to show you today is how to take advantage of that, how to know when you might be at the high or you might be at the low. So some of the questions you're going to have answered today is, if you wait to the end of the video, is why does the market make patterns? Because a lot of questions, a lot of traders who follow me on YouTube always ask, why is the market making a flat, as you say, right? Why Bitcoin would have to make a flat? There's no reason why it has to make a flat, right? I will explain to you why that question is posed incorrect as we go along, right? Another thing some people are asking is, how can you know what pattern it's making? They're random. And that is what I'm going to also show you in the thing. And then how do you take advantage of that? So what if you can see these patterns? How do you take advantage of them? By the end of the webinar, I hope I will be able to answer that question for you. So watch to the end. I'll go immediately. Let's start. So the basic concept, the basic idea of wave analysis is nothing moves in a straight line. We all know that, right? Nothing. Light moves in waves, or sound move in waves. Everything moves in waves. And that is how the idea of waves comes up, right? You can call it whatever you want, but we call it waves because it kind of creates waves. What creates the waves, right? What creates the waves, or what is a wave? Let me explain very simply what is a wave. What you would find in the market is that the market will make periods of very sharp move and then period of very, very slow moves. And that will be followed by a period of sharp moves. And these could be random. You might say they could be random. You don't know when this is going to end. You don't know when it's a sharp move coming. You don't know when, the slow move is going to start, or all of that, right? And you might have a point, unless you watch to the end what I do, and then you will see that you can actually know when it's going to happen. So let's go with that concept. Any chart you take, I'll take silver simply because I want you to see the silver chart from the historical one. So you might have an understanding. What you see is a period of very, very slow move. And then you find that it took off. Followed, reversed, another period of very slow moves, took off. Reverse, a period of slow move. Is it taking off? Is this going to break the top? See? That's the question. If we're doing that, then what would happen is we'll have to reverse again. So why is this happening? Is this because of economical reasons? Is it because of, some kind of, I don't know, people who like to talk about fundamental reasons? There's fundamental reason why this is happening? No, literally there is not. It's simpler than that. It's making money. It's remember what I told you to start? You're going to hear some very basic things that will blow your mind. Buying cheap, selling expensive. Buy low, sell high. Buy low, sell high. Buy low, well, this high will have to be here, selling high. It's very simple. So what is actually happening in this market? What is really happening? So how can you take advantage? What is really happening? What is happening is that regardless, sorry, that was not the intention. Regardless of what is going to happen in the market, right? there is a period of buying that is happening. It's a period that some traders call accumulation, some traders will call consolidation. You could call it whatever you want, right? It's a period. Just think of it simpler. Think of if you have to import, I don't know, mangoes from Asia to Europe. You would have to have a network in Asia collecting mangoes from all the farmers, right? Because a farmer will only grow a certain amount of mangoes. And then you would have a number of them, I don't know, hundreds of farmers growing mangoes for you. Somebody would have to collect all of that, process it, wash it, pack it, do all that process, and accumulate enough to fly or to transport in a boat or a plane or what. So you have to have that large amount before you make one transportation to Europe, and then you distribute it, right? That one, consider that point of accumulation in Asia, then an impulse to Europe, and then a distribution. Think of it that way. It's a simple way, right? That's how you make money. You have to buy and sell to make money. If you buy and hold, you don't make money. You have to buy and sell. So at a lower level here, you will see that it will take a longer time in this range. That's a period of accumulation. That's where they're buying, right? The big buyers. I don't mean you and me. I don't mean small hedge funds. I mean big banks. Big, I don't know, hedge funds or whatever, huge. These are big buyers who have holding power for years, 10, 15, 20 years. A small hedge fund cannot do that, because if a small hedge fund is going to hold silver for 10 years, all its investors will run away. They want quarterly report of profit. And if you're holding silver at the lower level here, you will not see profit for 10, 20 years. And you see the speed at which this goes? You really don't get to buy in those moves. Me and you can buy in those moves, because we will be going in a much lower degree. I will also show you that at the end of the webinar if you stick around, right? But you don't really get to buy in that. You also don't get to sell in it sometimes, which is what I'm warning people about Bitcoin right now. You might not get to exit if you don't exit early. The drop is going to bring you back way back to the low. So this is what happens. Let me go to a lower chart. So on the lower chart, we're seeing the last impulse up, and then we see the correction down. That's what we call a correction. The market is correcting itself. Actually, it's simple. The market is simply, at this point, they've already sold everything. So what you would find happening is that you need to keep it at the lower degree, at the lower level for a longer period of time. That's the accumulation period. That is you buying up the mangoes and washing and packing and all of that. That takes time. You have a whole group of people doing that for you. Silver or anything, it doesn't matter what it's. If currency thing, you're not going to go to one person and get a huge sum and shake the market up. You need to get it in smaller quantities so the price doesn't go up. Because if you go and you put a big demand, I'd like to buy a huge sum, the price goes up immediately. You don't want that to happen. You want to keep the price low. So you're actually controlling the price at the bottom there. You're buying very small volumes. If it's going up, you stop buying. You can even sell to get it back lower, right? So that up and down, you are controlling in that range until you've accumulated enough. What is enough? Well, you know exactly how much is out there. You know exactly how much silver is out there, how much is used. You have the stats, you have people studying it. So I'm telling you about a huge business. I'm not telling you about a small trader or a small investor or a small hedge fund or a small bank. I'm telling you about bigger than that. They know exactly how much is there. They know how much they need to accumulate. They know how much is used up already, how much is still remaining. And they can force smaller people to sell by holding it longer. Let's say you're a small bank and you have a reserve of silver for, 10 years and it's not going anywhere and your bank is not doing good. You might want to get rid of that reserve because you need cash. You need cash flow, right? And somebody big is going to buy it up. Somebody will buy it up. Price might go up eventually, but you might not be in it, right? So the idea is that they will accumulate it. That's the whole concept of the thing. They accumulate it in this one, and then they'll drive it up to sell it to the top there. So the question is, who buys at the top there? Who buys at the top? Who buys at the top here? Fools. I'm going to be blunt with this. Fools buy there. Who's buying Bitcoin now? Fools are buying Bitcoin. I know I'm going to have a lot of angry comment here, but that's just the fact. If you're buying at the top, you're actually setting yourself up for failure. The question you should ask yourself at the top is, who is selling to me at the top? Who is the foolish person selling to me at the top if he knows that it's going to go higher and I know that it's going to go higher? If both of us have the same information that Bitcoin is going to go to 1 million, why would I sell my Bitcoin at 50,000 or 60,000? Why would I allow you to buy it? You see, if you understand that, the very basic questions, ask yourself basic questions. When it was 18, 19, 20,000, the same thing I was saying. Be careful, you've made a peak. You can wait for it to come back and buy. If you wanted to buy, you had to buy when it was at a low at 5,000, 10,000. Same thing here. If you wanted to buy silver at a low. But that doesn't mean we, as day traders, cannot trade within this piece. We can trade it up, we can trade it down, because we are going at a much lower degree, and I'll show you that as we go along. We're going at a much lower degree of the same wave analysis. So what happens is that you've got a sharp move up, you've got all the correction coming down, and eventually we're going to get a sharp move up. Now remember, I'm on a yearly chart, so don't come on and say, oh, I'm going to buy silver, tomorrow it's going to go up, because we've had some very impatient traders like that. When I do analysis like this, they go and say, oh, you said silver is going to go up, and then you would watch silver come from here to there, and then they'll go and say, you said it's going to go up, I bought, look, it dropped, right? So don't do that. If you're at that level of intelligence, this video is not for you. So please, this is an analysis on a yearly chart, right? So take it that way. What I'm showing you is that we might be in a period of consolidation. An impulse, you'll find that they'll make an impulse, they'll consolidate the period, and they're going to go. You would find a million consolidation in there on a 5 minute or a 1 minute. Those are distributions. Those are not where they're accumulating. Those are where they're trying to sell to you at the top, right? The accumulation was at the bottom. They're distributing. They're selling off as they go. They cannot go move it to the top and try to sell all there. No one will buy everything there. Once it's moved away from the zone, the selling starts, because it's going to sell in small quantity going up. And the higher the price gets, the more people will want to jump in to make money, because you feel, oh my God, I missed Bitcoin at 5. Let me get it at 50. It's going to go to 60. And it might go to 60 and 70. It might even go to 100. Slowly, slowly. If they haven't sold everything at 60, they will keep selling at 70 and at 80 and at 90. And then the drop is going to happen. So that if you buy at 60 and it goes to 80, you might never get to exit that. Just like silver. If this thing comes to the top and you buy here, you're not going to get to exit. It might go a little more, but then it's going to drop like this. You're going to exit it here. Very likely. So if you understand this concept, you will know when you got to get out, when you got to stay in, when you got to get in, when you got to get it, and when you can stay with it. Now, we don't trade these bigger ones, but this is an example of what you would see on any time frame. An impulse, a consolidation, and another impulse. Most times, these small consolidations are just filling of orders, especially when you're in a distribution stage, not the accumulation. Even in the accumulation stage, you will find lower degrees of consolidation. They're just filling of orders. Somebody's accumulating, orders still fill on a daily basis, on an hourly basis, on a 5-minute basis, orders filled, right? So the concept is, because you would have an impulse, you'll have a very sharp move moving away from the zone, then they will have a period of this consolidation. Then we're going to go again. Then we'll have another period of the consolidation. We're going to go again, another period of consolidation. What is happening in there? Buying and selling. Somebody is selling, somebody is buying. And that will happen until all that you bought here is finished. And then you can drop it. You would have to keep some amount to drop it, because this dropping has to start with a big sell-off, right? We always hear this story, right? Oh my God, silver dropped because Soros sold off his silver. Or you will hear Bitcoin drop because, I don't know, Tesla exit their Bitcoin. No, they will exit part of it. Most of it they already sold. The profit is already out, right? So basically, that's the whole concept. Now, can you take advantage of that? If you understand that it moves like that, if you understand that the market moves like that, what is that to you as a trader? Can you take advantage of that? And that is where I'm going to go to the second part of it. How do you take advantage of that? Well, it's pretty simple. If you understand what is happening in here, which is the basis of what I do, wave analysis, studying the corrective structures in there, that period of accumulation or consolidation or creating of a pattern. If you understand what's happening in there, then you would have a very good advantage of getting the next impulse up. That's what we do, basically, right? So what we look for in there is some form of a pattern that we recognize that happens to be like patterns we've seen in the past. So you can go in the past and study all the patterns you've seen, come in the present and see, is this making one of that pattern? And if it makes one of that pattern, how did that behave? Did it drop to the low here, or did it go back to the high? Right? What does each pattern tells you? How many there exist? How many variations exist? It's not as simple as I'm telling you here, right? You just recognize the pattern. Sometimes it's very difficult just to recognize the pattern. That's what we do on a daily basis, because the patterns that you think you're looking at might vary a little when you get the next piece of information, right? You might get a slightly different pattern as the next piece of information comes in. The next piece of the chart is added. And then you said, okay, good. Well, now I see what this piece is doing. Let's see if it's going to behave that way. So comes to what are these patterns in here? Let's go into that one a little. And what you would find is that some traders like to call range trading, which is they will find a range. They'll just put two lines and they'll say, well, we're trading in that range. Nothing is wrong with that. The problem with that is that they always get what they call head fakes and false breakouts and all of that, right? Well, I'm not a believer that anything is false in the chart. This is statistics, and you can't say stats are false. If the price went there, then it's not false. What you have to do is understand it at a better level, at a higher level than false head fakes and false breakout. And that's what we do. We look at it in terms of patterns. Is it creating a pattern that we know? Is it creating something that we have seen in the past that is very similar to this and that behaves exactly the same way? And that is where the second question came. Why is the chart making a flat? One guy actually wrote that. He said, why do you think chart is making a flat for you? Well, first, it's not doing it for me. And the second thing is the chart is not making a flat. The market is not making a flat. That's the wrong way to ask the question. The question would be, what is the chart? What is the market doing? And whatever the market is doing, can I recognize something that repeats itself in it? And if I recognize something in it, can I give it a name? And if I give it a name, then can I call it a flat? So it's not the market making a flat for you. It's whatever the market is doing in that process creates a specific pattern that we call a flat. I hope you understand that now, so that question is clear for you. Again, so what we see in here will have a specific pattern that has been there in the past, that we have seen in the past. And because we have seen it in the past, we have a very clear idea what it did in the past and what it is likely going to do here. The percentage of it is about 80-90%. That's your advantage. About 80-90% of the time, the same pattern will repeat the same behavior. Like any human being, right? You can tell what someone is going to do if you studied him and you know his behavior very well. So it's exactly what we do here. If someone is a troll, he will be a troll in the future. He becomes a professional troll. You can't believe, if you're believing someone who's a troll, if you're listening to someone who's a troll, then you're on the wrong side of history, right? If that is a character of a person, a troll, then he'll be a troll. If a character of a person is something else, I don't know, he's a giver, he's a helper, then he's probably going to help someone else in the future, right? He's going to give something else in the future. So you can't be both at the same time. So you can study people, you can know, like Mother Teresa, we know what Mother Teresa, I should say, I'm talking Russian, sorry. Mother Teresa, we know what she can do. You can tell when she was alive what she would do next year, the next year, the next year. You know what she does. And if you take a guy who's robbing bank, you actually know what he can do is if he's out there free. He's going to look for a next bank to rob. That's just character trait. That's behavioral pattern. It does not change in human beings. And because human beings trade in the market, and because the idea of trading is to make money, that doesn't change, right? That doesn't change. If you're studying these patterns for the last 5 years, you get better at it. You get very good at it. And that's what we do in our group, study them on a daily basis. So we get good at it. So what we look at is here, we see, do we know something that in here? And when we look at it, we see, okay, every time it's always followed by a sharp one, it's followed by a slow one, and then it's followed by a sharp one. If we see this, the assumption we will make that when this is finished, either it breaks the low or not. When it's finished, it will make one more of that up. That's a 90% chance. You can actually stick around, and if you stick around long enough, you will see it, because this, I'm on a weekly chart, that will probably be months from now, but you will see it, right? And that is what the concept is about. Can you now get that next move to the upside? And that is where the strategy will come in. That's not wave analysis, that's trading strategies. That is something else we have in our group that we do. That's not for this webinar, that's for another webinar. So let's look back at it. You've got an impulse. This is the bigger correction, and then the next impulse. But inside of this, you're getting exactly the same thing on a lower degree. You get an impulse, consolidation, and an impulse. It means if you go lower inside of this, you're going to see exactly the same thing on each piece of that movement. On each piece of that movement, you will see a sharp move. You will see a slow move and a sharp move, a slow move and a sharp move. And then you're going to get a series of slow moves and sharp moves here. A sharp move, remember this one, if you're following me, you would know I told you that's what's going to happen. We're going to drop, we get another one, we drop. Are we reversing or are we just starting? Here is where it becomes difficult. You have this. Is that a reversal of everything? Or is that the start of a sharp move, a slow move, and a sharp move before you go lower? And this is where pattern recognition becomes difficult. This is where the difficult part is. Recognizing when this is going to be the one that goes out. And this is where knowledge of patterns and experience counts. Because if you have experience and you understand what's happening in this one going down, you would have a very clear vision when that is about to end. And you would know what to look for to identify the ending of it. Or you might have an idea that it's ending. You might be right at the start, and then it suddenly turns and it goes back down, and you said, okay, good. That's not the end. We have one more down. But guess what? If you have the right strategy based on wave analysis, your strategy has to be based on wave analysis, you will not lose in that trade, but likely get a break-even trade. So I've shown you many of those. If you're following me on YouTube, you would see the ones I was showing you in the New Zealand, right? So what we're looking for is, I don't think this is finished, because what we're expecting is that it might look similar to this in terms of length. It doesn't have to. It might look like that. So this might not be the start of the upside. But the good thing is we are already in the buy. Even if it is not the start, we are already in the buy. So internally in these, you can trade them, because we trade in a much lower time frame than the bigger market itself. We're not the big accumulating people at the bottom. We can't accumulate for 13 years and then let it go up, right? We want to make a trade today within the next couple hours. So we do exactly the same thing they do, except on a much, much lower scale. This is our scale. And if you ask me where our first entry was, here. And you immediately understand why. You have an impulse, you have a correction, we figure out it's going to go up. The next entry is here. See? The same concept. You're going to get a sharp wave, you're going to get a period of sideways, and then you're going to go. What could happen next? Well, next we could have a bigger period of sideways that might even come back to this level. A bigger period, and then we can go. Or we reverse back to the low. This one specifically can just fall to the low in a sharp move. If we didn't have this one here, then the chances are this one cannot fall back like that. It will have to make a period of sideways, go back up, and then come down, completing a pattern there. A pattern that we know, which means a period of consolidation before they go. And I can show you some of those at the top here that we did earlier, right? You would remember this one. You would remember this one. You would remember a number of them coming here. This one you would remember. This is the most famous one that you should remember, because once we got that, we figure out this is going to happen, and then we're going to drop. Remember how many sell attempts we had at the top there that didn't go? Step by step, if you're following me. Eventually, it gives us the bigger pattern, because from the time we see the smaller patterns, from the time we see the first 1, 2, 3, our assumption is that they can go. That's a complete pattern. We sold. And then they went back. You exit the trades way before they go back up. And then you figure out, okay, you're having a more complex one. We started selling that. Then they go back up, and then we start selling this, and that is the drop. By then, we figure out that if this didn't break that top, it's going to go down. Like I said, the details of the patterns is a whole long story. You've got to spend years doing that. But just so that you understand the concept and how you can take advantage of it. If you understand these patterns, if you're very good at recognizing them, you can take very good advantage. Why did we start buying so low here? We knew this was going to go back up. So that is how you can take advantage of those trades. Understanding the concept on any level, on any degree. Because the fractal nature of it is that you will see that the same thing. What is actually happening in here? And only a few days ago, I had it with my students. What is actually happening in this period here? This is not a period of accumulation. That's a period of filling orders. So on a lower degree, what is happening is just orders are being filled. And if you understand what's happening in here, you'll know likely which direction that move is going to go, this way or this way. It's the same thing. It's the same. Think of the accumulation on a much lower, on a micro level, right? It's mostly orders are coming in, they're being filled. The way the orders are being filled and the way that pattern in there develop would give you a very good idea as to which direction it is going to go. And then you would have a strategy how you're going to trade it. See? Pretty easy. It's not difficult. Like I told you, it's going to be simpler than you think. The difficult part is recognizing those patterns correctly, analyzing the entire chart correctly, and practicing it every single day. Now, you may think that if you watch this video, oh, this is great, I'll learn wave analysis now. No, you wouldn't. I'm telling you that. I'm seriously telling you. Just watching this video would not make you learn wave analysis. A series of videos will not make you learn wave analysis. And I'm telling you that because I've been doing it for 5 or 6 years. The entire concept of wave analysis separate from Elliott wave is what I developed. What I'm showing you is part of what I developed as a method of analysis. Elliott wave has a totally different method of analysis. It's based on wave analysis, just like Elliott wave has, just like Dow theory has. It does have some of those into it, but it's a whole entire different method. I don't see 535. As a matter of fact, I don't think it exists that way. I can show you in the charts now, but that will create an entire big uproar in the market. I think Elliott made a mistake in that part. And his biggest mistake was that he thought that you wouldn't get progression unless you get 5 waves up. 1, 2, 3, 4, 5, and 3 correction down. You need 5 more up so that you get progression. And this is where his mistake was. Because the impulses in the bigger moves, and when you're making a trending, when it's trending, when the market is going up, the impulses are much bigger than the impulses in the corrective phase. This impulse is much larger than this impulse coming down. So you can have not only 3, not only 1, 2, 3, you can have 4 and 5 and 6 and 7 in there. And you will not even cover this one single impulse. So you don't need 3, 5, 3, 5 to have progression. You can have 1, 2, 3, and you can have progression. And you can have very large progression in that sense. So the idea that progression will only be created if the numbers up is bigger than the numbers sideways is wrong. And I think that's the biggest mistake. Because I have not seen 535 in the market. I can prove that to you, but that's a separate video again. I've seen the wave analysis the way I show you. Look at it, very simple. Impulse, correction, accumulation, consolidation, impulse. Whichever of those you want to use. Whatever happens in that consolidation, correction, or accumulation creates a specific pattern. If you want to learn how to recognize those patterns, that's why you should join us. I hope this video is helpful to you. If you find it helpful, if you think you got some idea of it, you understand the concept now, you would like to learn it, share the video with someone else. Share the video with another trader. Let him learn it. Let him see what he's, if he can find the same thing, if he's seeing what we're talking about. And if he can, if he can understand why he's making a lot of mistakes in the way he analyzes the chart. So all of you guys, today is Good Friday. Have a good Friday. Have a wonderful Easter. And I would see you next week when I do the weekly outlook. Stay safe and stay healthy. Thank you. Bye-bye.